let's start with that commentary that the market is already discounted, or the market has already discounted the expectations that there has been relevant divergence between the Fed and the rest of the world, and the BOE also wanted to join there as well, but they so far have failed to do so. So that being said, we are at the day now that we can see the market to react on yes or no part of the market. I just want to bring your attention to this week's or last week's even market movements. You can see the market came up with pretty decent USD data. Each time the USD data came good, we saw the market reacting negative for the USD. Just to bring your attention, the NFP figures. NFP figures came out positive and the market reacted negative. So what it tells you is that we are ready. I'm talking from the market maker's perspective, that we are ready and we have already taken enough profit from these market rumors that the Fed was to hike the interest rates. Therefore, we are ready to take our profit. So this is the reaction that you are receiving now. So today's event that we will have, you need to focus on a word, and this word is rate hike. Okay, it's actually not a word, it's a phrase. Rate hike. Yes, we will rate hike. No, we will hold on to it. These are the two levels that you need to watch out. There are even automated trading strategies which are focused on this kind of analysis of the speech, and each time you would see this kind of word coming up, you will see that the market will react, positive or negative. So it is very much likely that if the Fed hikes the interest rates today, the first reaction you will see will be the dollar will depreciate. I repeat again, if we have the Fed hiking the interest rates today, the first reaction, first immediate reaction will be dollar depreciating. And it's very normal. But you shouldn't start selling euro dollar or buying euro dollar right away. So you need to wait for a couple of minutes for the market to basically discount the confusion, and afterwards you can start selling euro dollar once again, if that's the case. Or the other way around, you see the market right away going crazy bearish, which is still possible, and then you consider buying for the retracement. So in either way, you will be looking for opportunity to trade the market with. Now I'm going to be sharing some of the possibilities here. If you go ahead and put your chart on 15 minute, I repeat again, put your chart on 15 minute, add on your chart 50 SMA, 50 simple applied to close, and 200 SMA, simple applied to close. Make sure that they are marked with different colors. Okay, so if you see that just before the market, or right after, let's make it structured, right after the news coming out, the first 15-minute candle closing above both of the moving averages. Okay, let me draw it here. So you see that, imagining this is the candle. Let me actually make a screenshot of it and we can draw on it. So let's have a look at it. So imagine that this is the FOMC meeting results in front of us. So the first thing that you are looking at is the market location. Where is it before the news? Is it below the moving averages or it is above the moving averages? It's your first KPI. Let's say that the market right before it is somewhere in the middle of the moving averages, which is the major possibility. And the first candle that you see, that it is a bullish candle, and it also made a big wick. It's of course our imagination. This is a bullish candle, okay, and it closed right above the moving average, both of them, especially the 201 is the one that you will be looking at, okay. If that is the case, we will be looking for the market reversal for at least the next 45 minutes, okay. This is the first thing that you will be looking at. If it is the other way around, you can still continue for the market to continue bearish as well. Again, the next thing that you will be looking at will be the actual market support resistance level, and you can also do it on daily time frame. What you will do, and this is something that you must already start doing now before the FOMC itself, you need to start defining your support resistance levels. As an example, this is one at 1.1102. Let me change the color so that you can see properly. 1.11 is one of the resistance level. Then the next one is right over here, 1.10. The next one is right over here, 1.0860 level more or less. And this level can go just the way that you can draw. So looking at the market on daily time frame, I'm seeing two things. Market is in between two moving averages, 250 moving average on daily time frame I'm referring to. This is an indication that I'm ready for a breakout. This is how you read the market. This is something that you must understand. Next thing that you are looking at the market is that price action confirmation, whether you have higher high and higher low. That being said, we have one high over here, the next one was over here, this is one low and this is another one. So we have two higher highs and higher lows in total. This low is also going to appear as the next following higher low as well. So there is a possibility for us to confirm the market to continue on a bullish side, and that our target this way would become probably at 1.12 level. This is something that you can expect. However, the way you are going to be trading will be once again a candle confirmation that you need to have, which needs to be above the 1.10. It's the psychological resistance level, and it also coincides more or less with the 200-day moving averages. It's only 30 pips difference, and it gives you enough exposure that you can stay out of the trouble. Next thing that you need to do, there is a likelihood that the market will go insane, which means you might, let's say, press a buy order at 1.10, and very much likely that you will not buy at 1.10, but you will end up buying at 1.1060. It's because of the fact that no one, including the market makers, knows the market reaction to this news, because for me it is the most important news of 2015 after the SMB event. Okay, after the SMB event, this is the most important news of 2015. So that being said, you will have a major hit on your spread as well, because of the liquidity provider going cautious and giving you a strange spread as well. So watch your spread before you press that buy or sell button as well, just to check whether or not you're secured. Secondly, cut your entry by half. This is something that you must do. And finally, this is the next thing that I'm going to be sharing you as a strategy overall. Put yourself on a 1 minute time frame. This is the 1 minute time frame, and look at the market after exactly 1 hour of the results of the FOMC meeting. Okay, you are looking at it. Let's say the event started now. You give exactly 1 hour, 60 minutes. You're looking at your chart as well on 1 minute, and it will tell you the immediate trend of the market, whether it's bearish or bullish. You don't even need anything crazy. All you need is your moving averages, 50 and 200, once again, moving averages. If both of them are looking downwards, meaning if both of their slope are going to be downwards immediately within the 1 hour time frame of the announcement, you will be expecting the market to continue its downward trend until 12 o'clock midnight GMT time. Then you will see some kind of retracement afterwards. So make sure to analyze the market on every time scale as possible. Now, we have done simple analysis for the market. We know that we need to look for the 15-minute time frame in order to catch the immediate reaction of the market. This is the first thing that we need to do. Secondly, you know that after 1 hour from the event that you will have, you need to put it on 1 minute time frame. This way you will be able to see the market reaction to the event and catch the immediate trend as well and follow it. Don't go against it. Don't think that you can beat the market. Go with the market. And secondly, let's now look at the market from the Fibonacci point of view as well. For those of you following me knows that I'm a little crazy about the Fibonacci. So now let's try to find. I'm going to delete all these trend lines, etc., so that we have a clean structure for us. I can see one proper we're going to be changing the color of it so that you can see it properly. We'll add the 88 level. %. And also, just in case, I'm going to add negative 12% as well. This is just for us to be able to catch the market movement. So looking at the market, we see one thing on weekly time frame from Fibonacci point of view, and I would like your confirmation that you have a pen and paper so that you can write these levels down. Could you please confirm you have something to write down the levels? Let's look at the market. Right now on weekly time frame, we can see that the market is kind of reversing from the 50% moving 50% Fibonacci retracement zone. But you can also see that right close to the 61.8% Fibonacci retracement zone, you have the 50-week moving average. In general, this is the most important, well, for me at least, it's one of the most important Fibonacci confirmation that there is a strong resistance level at the given level. So there will be a likelihood for the market that right after the news, if especially Janet Yellen comments that there will be a rate hike, we are likely to see the pair to crazily go to 1.11 level, 1.1111. You can even make it 11111 as much as you can put the ones. And the market is likely to touch that level, test it, and then bounce backwards. So if you see such kind of movement, look for the market to reverse from that level. It is not a small market movement. It is a pretty long one, especially from the current level, we are looking for a spike of approximately 180 pips. So 1111 is the level that you will be looking for. This is going to be a potential reversal level for you. In the meantime, if you see the market go below the 1.0870, and you have a candle close, hourly candle close, you need to look at it on hourly time frame. Hourly candle close below 1.0870, it will also be confirming the market to be bearish. If that is the case, your next target will be from 1.08, let's say 65 level. Your next target will become immediately at 1.0635, and if that level breaks below, the next target that you will have is going to be at 1.0405 level. 1.0405 level. I personally have been waiting for 1.0405 level for many weeks now, and if that level is touched, you need to look for a major buy level. I do not expect the market to go to parity. It is just simply not feasible, and it's not recommendable from the Fed's perspective, because the Fed is also basing a lot of its market moves on the inflation, and you know that oil prices are heavily dependent on the dollar value. So when the dollar gets more expensive, oil prices will go more cheaper. So this is another thing that you will need to look for. If you see the market going bearish, you can start considering selling oil as well, and you can also start considering buying USD Canadian dollar as well. So this is going to be one of the most important movers in the market. Now let's also consider another currency pair, and this is the most volatile currency pair during the FOMC time. So this currency pair that I'm talking about is USD Japanese yen, and we can already see on daily time frame a price action development, a candlestick formation, which is bullish. You can see these three candles over here. It's a bullish candlestick formation. It just gives us a possibility to look at the market from the bullish perspective, though it's not really recommended for the market or for the retail traders just like yourselves to start buying at this given level. So what we can do, once again, we can refer back to our Fibonacci to see which level we could possibly aim for. And this is the level. Once again, we draw it, and let me make it as a ray so that we can see it properly. On weekly time frame, we can see that the pair went close to 12%. So once again, this is the level that you need to look for. I would, in case of a yes, we will have a rate hike condition, I will look for a potential buy opportunity from 1.20 level. So once again, from Fibonacci point of view, I will look for 1.20 level to start long in the USD Japanese yen. In the meantime, the best opportunity for the next 5 weeks, for the best opportunity for long the USD Japanese yen will be at 1.1850 level. That's at the negative 12%, or if you are looking from the other point of view, it's 112% Fibonacci retracement zone. Meanwhile, the best sell opportunity for USD Japanese yen will be at 125 level sharp. That's for two major reasons. We have 88% Fibonacci retracement zone at that level, and two, we have psychological resistance level at 125 level. So when you add them together, it makes a major difference. Plus, one final thing is that you can already anyway see a major resistance that we have had earlier this year multiple times. The pair touched in August and reversed backwards, and only once so far the market in May and early June the market broke above the 125 level, but it couldn't sustain itself. So these are the levels that you need to look for, and you need to aim for the best opportunities. Now let's look at the USD Canadian dollar also, and we will be finalizing it here. You're seeing right now the buy the rumors, sell the facts factor on the USD Canadian dollar, especially for the fact that the market is much dependent, or the Canadian dollar and Canadian economy is much dependent on the US economy as well, for the fact that the US is number one oil country that Canada exports oil to. So whenever something happens in US economy in positive side, it obviously reflects itself as more oil imports from Canada, and that translates itself as a positive reply on the Canadian dollar as well. But when there is anything negative also, it turns itself as a negative factor on the Canadian dollar too. As I told you, when the US dollar is appreciating, oil also starts depreciating. So as a natural oil exporter, oil dependent country, in times of financial developments like today, you will be expecting the Canadian dollar to depreciate as well. So let's look at the Canadian dollar from the market Fibonacci point of view as well. Let me see if this is the correct one. 2, 4. We have this one as an immediate real Fibonacci retracement zone. I'll go against my Fibonacci rules that I generally use, but just to give you the idea where it is likely for the Canadian dollar to continue its development. So far, right now, the immediate resistance level that I can see for the Canadian dollar is at 1.3850 level, more or less, and that's 161.8% Fibonacci retracement zone. Meanwhile, it is expected for the loonie to hit the 100% Fibonacci retracement zone at the 1.35 level, which is also psychological support level as well. I can see some of you guys are asking about the gold. Of course, it's going to be a major mover. Let me add it there as well. And it's going to be the last thing that we are going to be analyzing. So you need to understand the market from one perspective. When the economy goes into easing mode, which means when the Fed lowers its rates, the gold will start appreciating. And this cycle will turn the other way around when the central banks start hiking their interest rates. The gold, as a natural safe haven, starts depreciating. So based on today's expectations, if, I repeat again, if there is a rate hike, we will see gold depreciating. But I personally do not expect the gold to go crazily on the bearish side, although it has managed to surprise me multiple times in the last couple of months. 2, 4, 6, 7. I'm just trying to find one correct Fibonacci wave. We can use this one. We can see that the pair so far, gold to US dollar, it has managed to reverse back from the 161.8% Fibonacci retracement zone. And the next target that I would have, I need to add here as well, is the 200% and 112%. And if you are looking at the market, you can see that it almost touched the 112% in the last week of November before reversing back. So right now, if we see the pair breaking below the 161.8% Fibonacci retracement zone, which is at $1,055 per ounce level. So if you see the market break below that level, we are going to be expecting gold to continue its bearish move, and it should find its cap at 1027 level. Meanwhile, though, if I were you, although it's not a trade advice, it's just my personal opinion, I would just put a buy limit order at 1000 fixed level, and I would just leave it there. I would just leave it there for the next, I don't know, 5 weeks or so, just in case if the market touches it, because 1000 level is overall is the most influential psychological support zone. So whenever it will touch that level, you can 100% expect the market to go crazy, at least for 200 pips or $20 value. So use this opportunity. It's just a free opportunity for yourself. You can place a pending buy order and just go for it. But bear in mind that it will work only for the first time. For the second time, if it happens, it's likely that it's going to break below. We have a question from the one, break below or close below. So we are looking at the market on hourly time frame to close a candle to close below 1055 in order for us to continue our bearish move or bearish idea on the on gold. Meanwhile, if there is a possibility that you would see the market would bounce upwards first to 1100 level, then you can expect the market to basically fake it out as if it's going on bearish side, on bullish side, and then continue its bearish side. So you are looking on both sides as well. On weekly time frame, one thing that you need to understand, sorry, on daily time frame. Let me put it on daily time frame. At the end of today, if you see that the market is going to close, you can add a 5 simple moving average as well on your daily chart. 5 simple applied to close. And if you see today's daily candle closing above the 5-day moving average, you basically will need to take this part. It's more or less 95 pips. Multiply it by 2. That will be your bullish target. So basically, wherever it is gonna be from today's daily candle close, you take it, but the condition is that it needs to close above the 5-day moving average. If it closes below the 5-day moving average, you will not really consider bullishness yet, not at least not until the 1027 level at 200% Fibonacci retracement zone. This is so far it for today. Just bear in mind, watch for the word we will have a rate hike, or the Fed will go for a rate hike. And remember, the most immediate reaction for a rate hike will be negative because the market has already discounted it. But doesn't mean that you need to start buying it. The first immediate reaction is generally in times of discounted market moves like today's is gonna be negative, but then the next entries come out where market makers start hunting the small buys just like yourself. So protect your equity, don't just enter blindly. Allow the market to give you the right signal. We have already discussed about the levels that we have and then continue with it. And as I told you, you can put it on 1 minute chart. If the 1 minute chart is both of your moving averages are showing upwards, it means your trend is upwards. So start avoiding bearish entries. if after 1 hour both of your moving average on 1 minute chart is showing downwards, it means your trend for intraday until 12 GMT midnight is gonna be bearish. So use these opportunities for yourself so that you can get the best out of the market. Now, if you have other questions, please feel free. I'll be more than happy to answer you. Okay, we have the questions only after 60-minute chart. 60 minutes. Yes, you need to wait. If it is the 1 minute confirmation that you are looking for, it needs to be done after 60 minutes. Basically, you need to allow the market to get itself a minimum 50 period. And 60 minutes allows 10 minutes extra, which gives you extra confirmation. We have another question. What is a psychological level, or how do you determine the psychological level? Psychological levels are like 1.15, 1.20, or 1.30 levels, which are 0, 0, zeros at the end. Or in gold's example, 1000 is a psychological level. In your mind, every trader is psychologically focused on the number. It's a round number, basically, that every trader is focused on it, that the market should not break above it or break below it. That's why whenever the market tests those levels, not all the time, but approximately 70% of the time, you will have a direct reversal or correction wave, and you can make the best out of it. It doesn't really hurt as long as you are using the right money management structure. It doesn't hurt to make simple money, or easy money, we can call it. Any other questions? We have a nice question from Onur. Rate hike expectation is 25 base point. What if the Fed only raises 15 base point? Would this change anything or for our strategy? That's a very good question, Onur. Although many analysts expect 25 base point rate hike, I believe that the Fed will hike the rates by 10 base point, not 25. So it will add another reflection in the market, that because everyone has been expecting 25, if that is the case, it will be very negative on USD, and you can see a reversal in the USD trend immediately. Ripple Curtis is asking, do you normally wait after the news for a few minutes to take a position? I have multiple strategies that I use generally, but the one that is conservative, because I'm not anymore trading with small amount of entries, that you could call it. So I need to be cautious about preserving my equity than making money. Preserving is more important than making money for me at this given moment. So therefore, I do give at least 5 minutes after the news announcement. Any kind of news, as long as we have 5 minutes, it just gives me the opportunity to understand the market, and only then I enter the market on the continuation side. There is another question. Do I do any type of mentoring? Sometimes I do. It depends on my time. I don't know if I say your name right, Ripple Curtis. So sometimes I do have these mentorships, but for the last couple of years I don't really have the time. But what we have coming up, I can share with you if you give me a second. I'm going to be sharing a section, and I believe you would be interested in it. Maybe you can write me where you are from, and that would make it easier for me as well in my comment for you. Okay, South Africa. Although South Africa is not yet one of the countries that that I have on my list, we have this Pro Trader challenges. It's challenges. So far, we have Pro Trader challenge in Amsterdam in February. Then we have Pro Trader challenge in Kazan, Russia, in April. And afterwards, we have Pro Trader challenge in Malaysia, 3 cities. In Philippines, in Indonesia, in Hungary, Madrid, Spain, and Portugal. These are the plans. So if you believe that you could be one of the organizers for Pro Trader Challenge, you can go ahead to a2zforex.com and check the events section. You can probably write to us, and we will consider having your country on our list as well. We are basically considering a complete world tour for 2016. It means we will travel to the countries that you might not really believe that we will do. And in our team so far, we have myself. I've been nominated as the best trader of the year 4 times in the last 5 years so far. We have in our team equity traders who are trading $35 million plus every day, and we have also hedge fund traders who are trading for the hedge funds. So get the opportunity, sign up for it. Thank you very much for your time, everyone. It has been for me amazing sharing my experience with you, and be careful for today, because it's not just making money today. It's the most important part of today's fundamental development is how to preserve your equity. If you can preserve your equity, making money will be easy for you. So the way you preserve your equity is going to be looking at the market in a trend direction point of view. And once you define the trend direction, then you enter with it, and that's all you need. You don't need to worry much. And I'll come back to the comment of Honor once again. The market is expecting 25 base point. So if you see 5 base point or 10 base point or 15 base point, it will be a kind of disappointment in the Fed. So it might be negative on US dollar right away. So that will be the condition for you to start selling US dollar, not buying US dollar. Great comment, Honor. Thank you very much for it, by the way. Alright guys, this webinar is recorded. You will be able to rewatch it if you are interested after approximately 1 hour or 2. All you need is go to a2zforex.com, and I'll see you there. Take care for now and have a nice day. Take care for now. Bye bye.